Like real estate is a slow moving game. Remember that and play real estate like it's a slow moving game. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and man, I hope you're doing well. So we're almost halfway through the year here. If you haven't been reaching your goals, maybe take them back out, look at them, figure out what your goals are, figure out what you've been doing why you haven't been hitting your goals, what's been holding you back. Maybe it's, certain circumstances. Maybe it's your mindset, your attitude. Maybe it's your lack of focus. Um, there could be a variety of reasons, or maybe it's that the goals that you set at the beginning of the year aren't quite the goals that you're really wanting to achieve today. So I think it's really good to take your goals back out. By the way, I think it's really good to review them very consistently as well, and to tweak them as you need. But what do you not what did you do poorly in the first half of the year? How can you change that for the second half of the year? Really, what adjustments do you need to make? And how can you move forward positively so that the second half of the year is better than the first half of the year? Maybe you had a really, really good first half of the year, and that's amazing. That's awesome. I hope you did. But if you didn't, then what can you do now to change that? What can you do to improve that? And how can you look at that and say, okay, the lessons that I learned, um, you know, the first half of the year, how can I apply, that to the second half of the year? And again, even if you crushed it the first half of the year, okay, so what adjustments do I need to make to my goals? How can I even move forward even faster, even harder, even better the second half of the year? And so I think you really need to look at that. It's a reminder for myself to look at my goals and to say, okay, what did I want to achieve? What did we as a company want to achieve? And how are we showing up every single day? What are we doing every single day that's going to improve ourselves and not to cause us to move backward, but to move forward every day? Okay, so let's switch gears a little bit. I want to talk about the fast moving and slow moving pace of real estate. So it's funny because I see these claims from investors, from whatever news articles and the industry news articles, people talking up on stage, whatever it might be, that we have this pipeline of building. We had over expansion, which everybody knows. We had too much building happening in most cities, especially in the southeast, you know, a lot of Texas markets, Arizona, a lot of the mountain markets, Salt Lake, so on. And then the Southeast, look at Atlanta, Charlotte, Raleigh, um, most of Florida, most of the big markets of Florida, um, Nashville. Those all had overbuilding, a good amount. And there's this talk, and even like, look, even in the Midwest and in certain markets and certain sub-markets in the Midwest, and sometimes some a little bit in the Northeast. So even the markets that are doing really well, our Midwest portfolio has held up extremely well. We've had rent increases every year over year. But we do notice that there's not less demand, there's just different demand, because there's a lot of buildings that have come to market over the last 24 months. Um, and so many people expect that to change, like just boom overnight. And so what we're seeing finally in 2025, these record deliveries are starting to go down. So early part, basically the first half here of 2025, there's been a lot of deliveries still, but the second half there's going to be much less. And a lot of people are thinking, well, this is like it's going to happen immediately, right? Right? It's just all of a sudden it's going to shut off. There's high demand, or occupancy is going to shoot up. But what they don't realize is that real estate is such a slow moving game in many cases. And so what you're going to see is that, yeah, maybe deliveries go down. But by the way, deliveries are going down. But in most markets, deliveries are going down from a record high down to the norm. So it's not like they're just disappearing. There's still a lot of construction happening. We're still at the norm. It'd be different if we went from a record high to like almost shutting down, right? Like it did in 2008 and 9 and 10. That's not happening in this case. We're going from record high to norm. And so it's going to take a long time to absolutely actually absorb all of that inventory into the market and then to create this robust demand that so many people think that we're going to have. Now, quite frankly, I'm not so sure we're going to have this massively robust demand. I think it will be nice. I think it'll be good. I think we'll be in a normal place, but I don't know that we're going to have this robust demand that so many people think, and that all of a sudden we're going to go from negative rents in a lot of these communities, flat rents, negative rents in a lot of these cities to all of a sudden 5, 10, 15% rent growth, like a lot of people are projecting. Could it happen? Certainly. I don't see it. What I feel is going to happen is that we are going to see this negative rent growth slowly erode to a positive. And we, quite frankly, nationwide, if I look at the statistics, that's really what has happened is we're starting to see our rents slowly creep upward, not quickly, but very slowly creep upward. Now we're just over 0%. We're not, I don't even think the last national statistic that I saw was 1% rent growth year over year. Um, and then vacancies, same thing. We're seeing those slowly creep upward, and I think that's just going to continue to happen over the next couple of years as we're finally slowing our building down to a normal level. That inventory will get absorbed, and then it can maintain. And we're going to see nice rent increases, but we're not going to see exuberant rent increases. That's my opinion. Of course, every market is unique in itself, but I think the idea that a lot of people have is we're going to see 5 to 10% rent growth, and I just don't see it happening. It could, certainly could, but I don't see how that plays out. Regardless, back to my first point is real estate is a very slow game. And so to see these big swings and changes over a few years is just really unheard of. Or a few months. A lot of people think I've seen pro formas here where they're talking, well, yeah, we've got negative rent growth right now, or we got stagnant rent growth happening right now in this market. But building is shut off. And so we're going to see next year, we're going to see 5% rent growth. That's not how it works. I saw a deal the other day where they're talking like they're going to sell in 5 years for a 75 basis points drop in cap rates. Like that's just not how it works. This does not work that way. Things move relatively slowly. The market reacts relatively slowly. Now, could it happen? Sure. Does it typically happen? No, it doesn't. Like real estate is a slow moving game. Remember that and play real estate like it's a slow moving game, and don't get caught in thinking that fundamentally things will change because it plays into your favor. That doesn't make any sense. So when you're looking at these deals, just remember that real estate is a slow moving game. It doesn't move quickly. Now, there are some things within real estate or that affect real estate do move quickly. And to contradict what I earlier said is sometimes it does affect real estate fairly quickly. One of those things, as we saw recently, was interest rates. Interest rates have played a big role in moving real estate valuations. Now, for the most part, it has moved real estate evaluations slowly, right? And so when you look at the run up of pricing, it interest rates were going down and prices were going down or up. I mean, slowly, right? But what happened there is then in 2020, 2023, really, interest rates skyrocketed. And those interest rates skyrocketed, essentially shut the market off for a while. And again, it still moved relatively slowly. We're not talking like stock market, like next day type of thing. But in real estate time, it moved pretty quickly where we saw cap rates expand, by 75, 100 basis points, depends on your market. Cap rates expanded over just call it a year and a half. Okay. That's pretty drastic, like that big of a change in that short of period of time. Again, it didn't happen overnight. And that's the thing to remember. It didn't happen overnight. It can happen quickly, but quickly being a year or two. So if you're underwriting for things to happen quickly in real estate, you're just not understanding the fundamentals of the market. And that it drives me nuts when I see it. So just realize that and don't count on big swings, big changes. Don't count. The other thing is too, don't count on the market playing into your favor. I'm seeing that so often right now with these deals that come out. And it's like every so many people are counting on the market playing into their favor. The market doesn't like you. It doesn't not like you, but it doesn't like you. Like it so just because you buy a property today doesn't mean that the market is going to behave for you. Um, I don't understand the thesis behind that. And so, like I said, I just saw this the other day. Like this group is putting a deal out there, and the cap rates are going to compress by 75 basis points. And that's what's going to get them their successful exit. Like anybody can make that deal work. I could have made that. We could have bought that deal. But what happens if that doesn't work? What happens if it goes the opposite way? They did a stress test showing what happens if it doesn't work. They didn't even stress it back to today's cap rates. They didn't stress it beyond today's cap rates. Look, they're wanting a 75 basis points drop, but what happens if it goes up 75 basis points? What happens if it goes up 25 basis points even? Like this deal goes from being a good deal to being a terrible deal, especially if it went up 75 basis points. I don't even know if they would make money. They probably wouldn't. That's how tight the deal is. So don't assume the market's going to play nice with you. Assume the market's actually going to play bad. That's how I would look at it. Like that's how you want to be able to look at it. The ideal, the best property. Look, the best properties that I've ever bought are the properties where I just assume that everything's going to go to hell. Right? I just assume that things are going to be bad, that prices are going to go down, that rents are going to go down, that a vacancy is going to be high. I assume all that stuff, and the deal still works, and that I'm going to push forward with that deal, and those deals work really well. Now, I get it. Like you can't do that with every deal. The market doesn't work that way. And today's market's just way too competitive for that to work. So if you were trying to do that today, you just wouldn't be buying anything. You'd never purchase property. But those are the best deals. But if I can assume that things aren't going to play in my favor, at least, okay, rents are just going to go up at a normal, everyday level, nothing special. Um, we're not going to see rent declines necessarily, but uh, they're just going to kind of be slow and steady. And I'm investing in the Midwest, so that's pretty typical, right? Slow and steady. If I was investing in Texas or you know whatever, Florida or something like that, well, right now I would be showing that conservative would show that rents aren't going to go up for the next 2 years. And then they're slowly going to creep up. So we'll probably year one, zero rent growth, maybe year two, we got 1% rent growth, then 2%, then 3%. Then we would just chill out there. That would be a conservative look, where a lot of people are just saying, hey, year one, we're going to see 5% rent growth, 3% rent growth, something like that. Again, I see it all the time. Market, we're buying in X market that has rents declining, but some CoStar report said rents are going to go up by 3%. So that's what we're going to underwrite. Okay, great. Good luck. I hope you do well. But you're probably not going to do well. It's just how it is. All right. So that's my rant. That's that's what I got on my mind. Just remember, real estate moves slow. This is not a get rich quick scheme. If you want to be a real estate investor, you want to be successful, you need to look at it as get rich slow. You need to look at it as patient money. Things will go wrong. Things will go sideways. But if you've done it right, if you've bought in a good location, if you have, ample cash reserves, and if you've got good long-term fixed financing, that's all those things that can withstand a market turn, you will do well, in my opinion. Like, there's just, I guess you got to have decent operations too, right? You got to know how to operate the property. But with those things, I think most people are going to do well. They're going to make it through it. And look, the market could crash and maybe you don't do well, but if you do those things right, you will come out likely ahead in the long run. So that's all I got for today. You have a fantastic rest of the day. Make every day a Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.